Hey, what's up, my friend? So, in today's episode, right, I want to share with you some of the market behavior, right, of the stock markets. This is something that, most traders are not aware of because they think, all markets are the same. But hey, that's not true, right? Different markets, they have different so-called characteristics. And in today's episode, let me share with you a few techniques, right, that you can use, right, to trade the stock markets based on its own behavior. Number one, you want to buy strength, right, when it comes to stock trading, because right, research has shown, right, academic research, even my own backtesting has shown that stocks that has performed well recently, for example, stocks that has moved the most, right, over the last 12 months, these are the type of stocks, right, that would tend to continue to outperform the market in the near future. So you want to buy strength, right, in stock trading. In other words, you want to buy high and sell higher. Okay. Number two, in stock trading, right, you want to also use a trend filter. Okay, because the stock market is very interesting, because the stock markets, they always have an index, right, that tracks what the overall stock market is doing. For example, S&P 500, it tracks the largest 500 companies in the US. So if the S&P 500 is in a bull market, you can be sure that most stocks, right, would tend to be in the bull market as well, in an uptrend. But if the S&P 500 is in a downtrend, then most stocks, right, it will go down along with it. So how can you use this in your trading? Very simple, right? What you can do is adopt a trend filter. For example, if the S&P 500 is above the 200-day moving average, then you can take it as like a green light. You have a permission to buy stocks, right? Since the overall market is in an uptrend. But if the S&P 500, let's say, is below the 200-day moving average, right, means the stock market isn't doing too well, then you don't want to be buying stocks. You would rather hold on to cash, right? Since most stocks during the point of time, right, tend to be falling day after day, week after week. Okay, so this is a simple trend filter that you can use to know when you should be buying stocks and when it's better to hold on to cash. Number three, relative strength, right? So you can use relative strength in stock trading, right? Because it's a technique, right, to help you identify which are the strongest stocks to trade. For example, let's say the S&P 500 has, it did a pullback of 20%, okay? And you notice, right, that this particular stock, let's say stock orange, right? This stock orange, right, didn't really make much of a pullback. The S&P pulled back 20%, but stock orange maybe, just pull back 1%, 2%, around break even. So this, right, tells you that stock orange, right, it's a sign of strength, right? Because when the index makes a pullback, this stock orange still hover, right, at the initial price that it was at, right, prior to the index making a pullback. So you can expect if the index recover this particular stock, let's say stock orange, right, there's a good chance that it would even, break out of the highs first, right, and to move even further, right, higher, right, compared to the S&P 500, because in terms of relative strength, this stock orange, right, is stronger than the index. Okay, so you can use relative strength in your own trading to identify, which stocks are the stronger ones, and those are the ones that you want to trade. So the key thing when you're using relative strength, the easiest way to do it is watch, right, when the market does a pullback, which stocks are the one that holds up really well, which are the stocks that the pullback doesn't really affect those stocks, or rather those stocks still continues to consolidate or even continue to break out to new highs. Those are the stocks that you want to pay attention to, as they will continue to outperform the market in the near future. And finally, right, the fourth thing is, when it comes to stock trading, you want to avoid shorting the markets, right? And here's why. So in the stock markets, right, if you look at from its inception to where it is right now, almost all the stock markets, I think all of them, they are in an uptrend, in a long-term uptrend. Those that are no longer in a long-term uptrend are probably delisted, okay? So generally, you can say that stocks, right, it goes up in the long run. So when you're trying to short stocks, right, you are putting yourself at a disadvantage, right? Because you know that in the long term, right, the trend is up. So that's the first reason. Second reason is that stocks, right, in a downturn, right, it behaves very differently in an uptrend. When stocks are collapsing during a recession, the price, right, can drop, collapse day after day, huge bearish candle. But at the same time, right, there's something called a dead cat bounce, right, where you see the rally after a strong collapse is also equally strong back in the opposite direction. For example, the 0809 financial crisis, you can see that V-shaped bottom, right? So stocks, right, exhibit this behavior that in downturn, right, in bear markets, right, the price can drop very fast. At the same time, right, the rally, the pullback is equally sharp towards the opposite direction. So when you're shorting stocks, right, and if you're trying to short stocks and you hold on to your trades too long, you realize that all your open profits are quickly eroded. So for inexperienced traders, I recommend that you stay away from shorting stocks, right? If you want to short stocks, do it only if you're experienced and you know what to expect when you're shorting the markets, right? But for new traders, avoid shorting stocks, right? Because number one, overall market is in long-term uptrend, and number two, right, the pullback is very fast and quick, right? And if you're not, fast enough to react, right, you will lose your profits very quickly as well. Okay, so these are the four techniques, right, I want to share with you about the stock markets, right, the behavior of the stock market, and hopefully you can use it for your own trading. And with that said, I have come towards the end of today's session. If you've enjoyed it, smash the thumbs up button, subscribe to my YouTube channel. The button is below. Click subscribe, and I will talk to you soon.